City of Sherwood Budget Committee meeting for March 5th, 2026. David, will you please conduct the roll call?
Chair Strode?
Here.
I know Matt Kaufman is absent. Brian Fairbanks, absent. Aaron Wiebe?
Here.
Lana Painter?
Here.
Thomas Sherwood?
Here.
Nancy Taylor?
Here.
I know Tim Rosner is out. Kim Young?
Here.
Renee Browse is absent. Taylor Giles, is he online? I don't think so. Not yet. Okay.
Birthday.
Keith Mays?
Yeah.
Doug Scott, absent. Dan Stankey, absent. Okay.
Okay, the next item is approving Budget Committee minutes. Can I get a motion to approve the City Budget Committee minutes for December 4th meeting?
So moved. Second.
All right, all in favor?
Aye.
All opposed? All right, motion passes. Tonight's meeting will be a working session only, so there will be no general public comment at this meeting. Now we'll move on to new business as we have a number of items to cover tonight. I will turn it over to the city's Assistant City Manager, Kristen Switzer.
Good evening. As we already mentioned, Craig is out this evening. He and the mayor are traveling back from DC, so I'm filling in, but welcome. Thank you for being here. And I'll just turn it over to David. Thanks.
So tonight we have a special guest with us from TKW. That's our outside auditing firm, independent auditor that comes in every year. They audit the books of the city at 6/30/2020 or 6/30. That's our fiscal year end. They've been doing the audit, well over a decade now. So at the last budget committee meeting, one of the members asked if we could have the audit partner come talk to the committee. So with that, I'm going to turn it on over. This is Dan Miley with TKW. And while he's introducing himself, I'm just going to pull up a presentation that he has for, this is mainly for the folks at home.
Thank you. I'm Dan Miley with Talbot, Kovlat, and Warwick, also known as TKW, a little bit easier to say. So we're going to be going over the financial statement audit, as David mentioned, for the last fiscal year, ended June 30, 2025, for the city and the URA. I'll try and do it at the same time because a lot of it's repetitive, and I'll try and specify what's just city, what's URA and city. The URA is a blended component unit of the city, so it's sort of tucked within the city's financial statements already. So sort of whatever impacts the URA will also impact the city's financial statements. The audit was conducted with generally accepted auditing standards within the United States, so otherwise known as GAS. We love our acronyms, especially when you have to say something that long. We were out for interim field work, and this is planning.
Somebody talking?
Yes, can you hear us? Taylor, can you hear us?
You can continue.
Okay. Yeah.
Well, I
Okay.
heard him though.
So this was interim. We do our planning, our risk assessments. We talk with a lot of different people throughout the city, from city councilors down to accounting staff, just to get a feel.
You guys hear me? I cannot hear you.
Yes, we can hear you.
We'll have Brad.
Yeah.
Well, Brad can communicate.
Yeah. So.
Can you guys hear me?
Yes. Yes.
Oh, now I can hear you. Okay.
Oh, great.
No
I don't know what happened.
So we do that to sort of plan for our final field work, and that's where we actually dive into the numbers and go through that. So that's a little bit about the different timings there. So in July, we come out, do our planning work, come back in November to actually look at the financial statements and make sure our testing's in line. Glad to say that the financial statements are unmodified, so we'll just start their opinion. So that is the clean opinion, that's the gold standard, that's what you want. That means that the financial statements are reasonably stated, materially correct. So that's good. Just a little bit about the financial statements. There's an introductory section and all like that that has some good information. I always encourage people to start at sort of the MD&A of the financial statements, the management discussion and analysis. That provides comparative from one year to the next at a high level. It gives some reasons for why things changed. So it sort of gives you okay, this is where we're at, this is where we're going, type of thing. Behind that is the basic financial statements, which has entity-wides, fund financial statements, all like the fun stuff. Then the notes. And those notes are really important because they help inform what those numbers actually mean and what they say and all that fun stuff. Then behind that, you have RSI, which is budget schedules, some schedules for about pensions and OPEB. And then we go to other supplementary information, which is more budget schedules. So it goes on and on. And then there's a statistical section, which also has a lot of good information. That's 10-year histories of a lot of financial information, and then some operating ratios of this year versus 9 years, 10 years ago. So that's sort of the layout of the what we call the ACFR, the Annual Comprehensive Financial Report. The URA is a little bit shorter. It's just an annual financial report, so it still has an MD&A, the financial statements, the notes, and the supplementary information, but doesn't have the stats, and it doesn't have like a transmittal letter and a little bit more formal. So that's sort of the differences between the two. The last sort of bit of the financial statements, there's a report in accordance with Oregon state regulations we call OMS, Oregon Minimum Standards. We did have a couple findings there. For the URA and city, we both had some significant deficiencies that we had communicated in a separate letter. But then there was also some excess of some expenditures in excess of appropriations for the in the general fund. It was administration, public safety, debt service, and then in the sewer fund operations. So just the city exceeded the authority that was appropriated there. The significant deficiencies covered things like arbitrage liability and time cards, and that impacted both the city and the URA. For just the city, there was some fair value adjustments for investments that weren't made. Not material, but enough that we had to mention it. And then just there were some various revenue transactions, mostly had to do with timing, types of things of recording the right, and the amounts were right, but in the wrong period. So either last year or they hadn't recorded the revenue yet because they hadn't received it. So nothing too big there. And then just some classifications of debt service payments between principal and interest. So.
And I was just going to add something. And in terms of significant deficiencies under kind of the Oregon State Audit Division, you know, we're required to implement an action plan. I brought this in front of City Council. I think it might have been the first meeting in February, just kind of the actions we have taken to correct these deficiencies. So I came from the auditing world. Everyone has their own opinion. I take significant deficiencies or anything that they note as more of, you know, it's kind of like assistance on what you could do better to just tighten your controls down. So,
yeah, it's always good to be able to improve our processes.
Yeah. So, as Dave mentioned, we did take a look at that corrective action plan, and so hopefully those will go away. Sometimes, depending on the timing of the audit, they'll show up another year. That's actually, I think, one of the control deficiencies we found as part of the 24 audit, but since it was already halfway through the year, it still impacted 25. So sometimes it takes another year to get that sort of cleared out through the system.
And that dealt with the time card review. It was notated last year, but as Dan was saying, we're already midway through the year. We have since corrected that. We did transition to a new payroll system, so there was a little bit of a learning process there of, you know, kind of the approval processes, but we've corrected that, and we implemented that even before the audit. Before this was issued, we implemented that with our payroll staff.
So some things that we feel that, well, standards say that we're required to, but we also think that it's good information for you guys to be aware of. The city and URA implemented 2 new accounting standards, GASB 101, compensated absences, and GASB 102, certain risk disclosures. Neither of these really impacted the URA, but the compensated absences did add about $1 million of liability to the city's balance sheet. And this is more of accounting for sick leave. Not necessarily that you're going to pay it out, but it will be used. So trying to match that when the leave is earned to when it's recognized as expense at the city level. So nothing's changed. There was no new policy. This is just, we changed the rules of how we keep score in the accounting world.
Yeah.
So,
God bless you. accountants.
hey, Governmental Accounting Standards Board, I don't write the rules, they do. I just audit to them.
We like to invent new things every year.
Yeah.
So, yeah.
Oh,
That was a
they're
fun
almost
one to
like-
implement, sick leave.
Yeah.
Yeah.
Which is kind of weird because it doesn't actually add any more money to the expenses because salaried people get their salary even when they're sick. So it's not like they get their salary and then they get some sick time. So I don't,
I
that's
think it has
weird.
to do with banking it,
Yeah.
though.
Oh,
The way that
I
they
understand.
Yeah.
It's
bank
just
it
a
on
weird
paper.
thing.
I mean, it is weird because, you know, that we don't pay out sick leave when
Right.
someone leaves. If I'm sick for a week, it's not like the city says, well, you got to go hire a finance director for those 5
Right.
days while you're
There's
sick.
not an
David.
additional cost to
Yeah.
the
No, you
budget.
have to work twice as hard when you get back and
Yeah.
figure it all out.
But it's like gift certificates for a business. You know what I mean? Like, you sell them, but you don't know when they're gonna come in. I mean, you know, it's weird.
Yeah.
So, yeah, at the end of the day, there was no change to how you accounted for it on a budgetary basis. It only impacted your statements, your proprietary statements, so your water fund, sewer fund, those things. And your, what we call the entity-wise, your governmental activities and your business type activity. And it just added a little bit of expense
And work.
and work,
For David.
yes. So,
But now we know.
And
yeah.
the Gatsby people
Bad.
or whatever you're counting, the gods that change these rules, it's all in the best intentions.
Yeah.
But sometimes they're like and I would not want to truly compare, but it's sort of like, they meet, so they should do something. Not almost like the legislature in Salem. They're getting together. They need to create some bills. They need to muck stuff up.
I can say that,
They could be listening, so be
yeah,
careful.
Gatsby has slowed
So they're for
their
sure listening.
standard making. The chair of Gatsby was at a conference, I think it was the OGFOA conference a year or two ago.
Yeah.
And very clearly said that we get you, we hear you, but a lot of these were already in the pipeline. And so if you look out, going through, there's some bigger ones out there, but a lot more it's just sort of cleanup things and a little adjustments here and there for all good intentions.
Yeah.
The certain risk disclosures, this is now a requirement that if something is going to significantly impact the city or URA, either financially or operationally, you now have to disclose it in the notes. So this would be like, think of like a school district where 90% of their teachers are part of the union. The union goes on strike. That may impact how that school district operates. And so if that happens, or you think it's going to happen imminently within a certain time period, you have to put that out there because these financial statements also go to people who buy bonds. So if all of a sudden you buy a bond and then you go, wait, the city now can't pay it back, or for whatever reason something bad happened. So that's sort of why that was put in there. Neither the URA nor the city had anything that through David's evaluation and what we looked at rose to that level. Because it would be big. Pretty much you would already be, the people in this room would probably already know about it. This wouldn't be news for the city. This would be news for people looking at bonds or outside of the geographic area.
Well, you used a good example of school districts, and that could be cities too on
Yeah.
strike
Yeah.
because of that new strike law and them getting the first 6 weeks
Yeah.
paid unemployment, which governmental school districts and cities pay actual.
Yeah. Yeah, another example is if you had think of a small town in like Southern Oregon, their main employer goes out of business, property tax revenue. That would take a hit. Now, the rules state that, okay, if you can mitigate that, so let's say they have really awesome economic development people and they already have a company coming in to take that, well, there's really nothing to disclose there because there's really no significant impact there. But if you go, oh, dang, we can't find anybody, then that's something that you would have to put in there. Like, hey, we have a major employer, a major property tax payer that's gonna go out and we have no way to do it. It's a little bit more involved in that, but that's the basic gist of it.
Would example of that be, sort of, for example, what's going on down in the city of Portland with the revaluation of a lot of those big buildings down there and some of them,
Yeah.
I'm just,
Yeah. Possibly it all has to go with, okay, what's significant to that entity, and so some of those adjustments may, once you get through the whole line, may not be material to a couple $1 billion entity. I haven't looked at the city of Portland's financials recently, but there's some, what may be big for Sherwood may not be big for for Portland. So
exactly. And an example of that, I came from Clackamas County and we switched our long-term debt, or not long-term debt, our fixed asset policy, and we wrote off about $16-17 million in assets, which were not material because we're talking over a couple billion. So yeah, it depends on the size.
Yeah. To go with those control deficiencies that we talked about earlier, most of the time those are sort of go with either an adjusting entry that we propose the city make or an uncorrected misstatement that we said we identified, we brought to David's attention, and they went, well, it's not material, it's the cost benefit wasn't there for the make. All the uncorrected misstatements, we agree that it's not material to the financial statements, but it was more than trivial, so we had to let you guys know, and that was in the audit results letter that we provided to the city council at some point in time. But you can look at all of those. If you don't have a copy of that, sure, you can either ask me or David, and we can get you a copy of that. And a lot of it had to do with investments, cleaning up some of the revenue stuff, arbitrage liability.
And like uncorrected misstatements, it might be something to where, oh, they identified something in current fiscal year that should have been recorded at prior fiscal year. End of the day, the bottom line, the number's still the same. It's just a matter of if it's not material, well, the cost benefit's not there. It's still added to our books, but it's just in a different fiscal year.
Yeah.
So
another one to go with those things to ask GASB about is that your LGIP account, so your local government investment pool, is technically investment. Well, that has to be stated at fair value. Even though you put $1 in there, they tell you have the $1. If you try and get that fair value out, you won't get it. You'll just get your $1 back plus whatever interest you've accrued. But GASB states that that needs to be at fair value. So the state puts out their financial statements for LGIP every year, and it gives you a factor, and that factor was above what we would consider trivial for some funds. Not every fund, just some funds. So that's where you'll see that hit. A lot of the lines of the uncorrected misstatement had to do with that LGIP adjustment. So it operates a lot like what I would consider a money market account that you may have personally. But it sort of sits in this world within GASB that it's treated like an investment that should be at fair value. So that's just another sort of uncorrected misstatement out there. One of the things that we have to tell you is that if we're aware of David going around and asking other accountants if they had a better idea, something that he might have liked better, we're not aware of any of that.
David, did you do that?
You can sort of infer that might cause some difficulties in the whole audit process. GASB has 3 issued standards as of right now. The financial statement reporting model improvements, that's 103. This was going to be far-reaching and very painful. They have pared it down to now it's things like making sure that MD&A really is about analysis, not just boilerplate stuff. It's about getting rid of terms of special and extraordinary items that nobody knew what they were, and now just calling them infrequent and unusual items, which I think is probably good. One of the weirder ones, probably what's going to take David a little bit more work, is reworking the proprietary statement, so your enterprise funds and your internal service funds, not that you have internal service funds, to be in a new format. And they gave you definitions of what's operating revenue and expenses now, what's non-operating, and how to present that all through. The other thing that's going to cause David a little bit more work, or Leslie, whoever's doing it, is your budget schedules now have to have one more column. You now have to show a variance between your beginning budget and your final budget. I don't know why GASB did that. They have some reasoning in the standard, but they do that. And then they also moved, one of the things they moved out of MD&A was this discussion about variance of your budget. They now moved that to notes of required supplementary information, notes to RSI, so they sort of put everything together there. I guess that makes sense. And then a few other odds and ends to go along with that. Disclosure of certain capital assets. This has to really making it crystal clear, and I think a lot of our clients are already doing it. You have to show your intangible assets within the individually by category, by major class, in your capital asset disclosures. So you can't just put right to use. You have to have, okay, these are subscriptions, these are leases of buildings, these are leases of vehicles, whatever else you might have out there. And then if you have them, I haven't seen one in a client yet, your public-private partnership assets. So there's that. And then also it gave some guidance explicitly for the first time about available or assets held for resale. So if you think you're going to sell something within a year, there's some additional disclosure saying, hey, we think we're going to sell this. Here's the cost of it. Here's the accumulated depreciation that we booked about it. And it may serve, and here's the collateral it serves against. So if you pledged, let's say, a building for a bond or a loan, you would have to say, hey, we also have this amount of debt against it. So.
Well, that's an interesting one, because you could think you're going to sell something, but you could also not think you're going to sell something and then end up selling something.
They use the word
How are they going to
probable.
prove you thought you were going to sell something?
You have to justify it to your auditor, I guess, or whoever. They do lay out certain factors to consider, like, has it been approved for sale? Do you have regulatory approval to sell it if it needs it? Have you actually actively marketed it? Yeah. Have you gone out and hired a real estate agent if it's real property? Like,
Yeah.
There's certain things like that if you've done all those things, it's actively for sale. Now, one could say, well, we priced it so high that nobody's going to buy it for next year, but you've taken all the steps there.
Yeah.
But this isn't just like, oh, gee, we might want to sell this one day, and we think it's going to be within a year. It's no, we've actually done certain steps. We have it in, another thing is like, if you think it's going to be sold within a year, hey, it shows up in the next year's budget. Like,
Yeah.
that was proceeds. So you've indicated that this is a good problem. It's probable, which is sort of that 75% likely that you're going to do it threshold. And then the last, and those two are both due for the fiscal year that you guys are in now, so 2026. For 2027, fiscal year 27, there's going to be one on subsequent events. And a lot of this, if you've ever looked at a financial statement within the commercial realm, it sort of takes the FASB rules and says, yep, we're going to put a government spin on them and say, yeah, you have to disclose the date that you considered subsequent events through, and a lot of the same terminology there. And it pretty much just, hey, this thing happened. We issued more debt. Okay, that you have to disclose. Even though it doesn't impact the numbers in there, you do have to let somebody know that, hey, you may have done something like that impacted. Like we use, going through the questions when we ask about it, it's like, well, did anything burn down? Did anything flood? Did you get any new debt? Like, So fixed assets and debt are normally the ones that, or capital assets and debt are normally the big ones there, but it could be, oh, I lost a major revenue source or whatever, which city has multiple revenue streams, so I don't see that being too big of a deal, but you can think of a government entity that gets a lot of their money from one source, and if that has issues, that could be, cause some distress for that government.
Wouldn't COVID have fit in that category because COVID was out of nowhere impacting everything?
Yeah, it would have been for the financial statements if you hadn't issued your, trying to get all the timing right. So if you hadn't issued your 2019 financial statements as of March 2020, that probably would have been a subsequent event to put in that disclosure. So just trying to get all the fact pattern right there. But so yeah, something big like that, it goes back against like some of those certain risk disclosures would tie into the subsequent event disclosures as well. And you don't have to repeat them. They actually say, do not repeat things if it's already covered somewhere else. This is also an opportunity that we like to take to say that there's a shared responsibility for independence. We do a lot of things to make sure that we stay independent, but we also ask our clients and the people that we work with to make sure that you don't trip us into some independence rules. Like, don't ask, like, we're relatively small, so we know that, but think of like the big companies that may have an arm that never talks to another. So go get a consulting job from the same company that's doing your audit, and there might be some issues there. But we still like to say, hey, if there's anything going on, some people might call, every once in a while we do some work with like payroll tax and whatever with some of our clients, and it's like, hey, just let us know that you're doing this so we can make sure that we keep our independence from you guys, so we can issue an independent auditor's report. And then also that was provided in a letter to City Council was attached to that was management representation letter, and this is a list of 7 to 9 pages, depending on the government, of things that management has told us. We sort of refer to it as the truth, the whole truth, and nothing but the truth letter. Yes, we answered all your questions. No, we did not do this. And yes, everything we told you was true type of letter. And it also hits on certain things that, yeah, we take responsibility for the entries. We don't need anything that we gave us. We gave you copies, so you can dispose of all that stuff. Those types of sort of administrative things as well is tucked in there.
And during your audit process in the beginning, just for people that don't know,
Yeah.
you interview lots of people,
Yeah.
usually 1 or 2 people from city council, several staff members, and some of the questions are like, do you suspect any fraud? Do you have any concerns? So it's...
Yeah, and that's definitely part of that risk assessment process that I was talking about at the beginning. It's like we talk with David, we talk with, and we try and change around the people also, like, so we're not always talking to the same person, because sometimes you just get into the route of, oh, the same answer gets. It's like, oh, no problems. Okay, cool, move on. So we do try and get that different viewpoints of like, because different people see different parts of the city.
Yeah, and of course they always interview myself every year, of course, because I'm buried in the numbers, but for example, my staff, and then there might be some stuff that I'm not privy to, so that's why they kind of go up the chain of city attorney, city manager, city council, you know.
So, yeah, that beginning is a lot of just gathering information to help inform how we want to conduct the audit in the most efficient way.
Can you share what you think the biggest risk to a city of Sherwood would be?
I think in the current environment, especially in the context of like, okay, how do we get more revenue and how do we pay for things, of just the compliance requirements of everything, of not even intentionally trying to get yourself into trouble, just stumbling into trouble. And I see that happen more often than I care to admit, of just, there's a lot going on within the GASB rules, and then with federal money, there's the federal regulations, and then there's the state regulations, and I haven't seen a corresponding increase in staff in almost any of my clients' base to go with all these things that we're asking of Dave and his team to continue to do. It's like, oh, by the way, now you have to do the sick leave calculation on top of all the calculation you've done. GASB very rarely takes anything away. The feds very rarely take away any regulation, at least when it comes to the money that they're spending. The state, same thing, doesn't really normally, I haven't seen them take away anything that they want us to look at. Normally it's adding on to. Yep. And so that's, in a lot of ways, I think, in that realm of just being careful of what you get into and some of those fundings that and I used to work for a county, and I remember somebody asking, oh, we need to go get this like $20,000 grant because we want to do this great thing. And we looked at the requirements, and it was going to be like 30 grand of compliance requirements on top of it. Of like, wait, that doesn't make sense. Matters,
Well, yeah, when you start taking grants from especially the federal government, or if it's state and federal combined, the compliance behind that is.
And luckily, we didn't have a federal audit this year because, we will this upcoming current fiscal year because of the EPA grant and some of the Ice Age Drive as well, because there's some federal monies mixed in there. But for example, like last year, a lot of the school districts are running into trouble because the compliance supplements were not released by the federal government until I think it was the end of November, and that's tells you what you should be doing. And so
it was a Thanksgiving present.
Yeah.
So to go with that, and just that smaller entity, just making sure that you maintain that control environment, that even as people get stretched, you still have those checks and balances in place to make sure that one person doesn't have too much. Because that, even if somebody's, it works both ways. One, it keeps honest people honest. Two, it also protects the honest person from a simple mistake of going, hey, somebody else looked at this, like it wasn't just me. And so really, as your resources get stretched, how much, and that's definitely a discussion you guys can have.
How many of these rules can be managed effectively just with more modern tools?
Yeah. And so there's a lot of buzz in the accounting world, as I'm sure in every profession, about AI and technology and all like that. But sometimes that move fast and break things approach to your core competencies may not always be best. And so take advantage and use technology where it makes sense. Make sure you test it out. Make sure it operates as designed. Make sure there's controls. Something that we always ask David for is, at least things that touch the financial system, is what we call service organization reports. And there's reports over processing. So there's SOC 1 reports that we call them for like payroll processors. But then there's also like SOC 2 for like data centers. And it goes over what's their privacy and security and uptimes and all like that. So, and those are actually issued by other CPAs. We don't do the work, but that goes over, and it's just about their controls over that process or that data that they're handling on your behalf. So, so your payroll processor has one. We ask for it. We look at it. We make sure that within there's what we call complementary user control. So these are controls that says, hey, we rely on you guys doing certain things. Like with payroll, we rely on you making sure that the right information was uploaded. We rely on you making sure that the right information, the reports were correct. What got spit out on the other side. So those types of things.
So overall, we had a good audit.
Yeah,
Few
good.
things that got noted, but nothing.
Corrective action plans in place. So we're hoping that those things work themselves through.
And luckily, for example, like the arbitrage, that is going away.
Spent the money.
Yeah. So we don't have to worry about that comment again. And for time cards, that's been addressed. The nice thing about the new payroll system too that we implemented, it has a audit tracker. Shows every time someone changes something in the system, it tells you who changed it, what date, what time. So it's been great. So
Very good.
you can't really get away with anything in the payroll system.
Well, thank you for your time and thank you
no
for coming here to help report. So
Yeah.
I appreciate it.
No, it's always good to talk with you guys and make sure you understand what these little because our pieces of the paper are only, I think, like 5-6 pages within this 100-page document, and they say a lot in very specific words that we know because it's government auditing standards or generally accepted auditing standards, but like, what does that actually mean?
So on a biennium budget, you still do annual audits? Okay.
Yeah.
So in a couple months, we'll see them all circled up in the table upstairs. If you come up during that audit time that they're out here, they take the table upstairs, and there's several of them sitting down, there are multiple computers, and they're all just auditing away.
Yep.
Yeah, we have found that even with all the remote access that we can get and everything, there's just something easier about being on site and being there and being able to talk with people and going, no, this is what I'm talking to you about.
Exactly.
Awesome.
And really, I'm glad you're doing your audits. Very good firm.
Yeah.
I wish there were more firms in Oregon that were doing government audits. But you've consistently, your firm has consistently done a nice job.
Thank you.
Yep.
Appreciate your hard work.
Well, and we appreciate David and his team because it's not a little bit. We're here for a couple weeks, and then it's all the back and forth of keeping up and wrapping up a little loose
And David
ends.
has a small team.
Yeah.
That's a lot.
And it's usually about a 2-3 month process. I mean, it's like budget season for us, and again, but it's just for the finance department in the fall. It's not, other departments aren't feeding us information, so it's a lot.
And do you do their own report too?
Yeah, we have the last few years, we've been engaging a little bit of outside assistance, and that's another thing. Just a little backstory about independence. It gets a little challenging to say, hey, as an auditing firm, we want you to prepare this report too, because they have some standards, and once you start talking federal awards, they can, they have to watch their independence about preparing certain things. But yeah, we have been, it's helped out a lot. Like this year, we would have probably been issued on time, but we had the arbitrage report not coming until that first week of December, and we already had started the audit, so we had to adjust the URA books, but then adjusted the city books. And so I think we issued within the second week of January, so it was really close to, making it on time. But we did our extensions and everything, so.
What is the time? I didn't realize there was an actual date that had to be done by.
Yeah, under Oregon, I guess the state audit division, by December 31st, but you can request extensions. They're starting to, I would want to say the state's not, they're not always approving extensions, I'd say. They're kind of starting to,
They're tightening up on a little bit.
Yeah.
I think they
That's a
got
good word.
very loose during the COVID era, and people started taking advantage of,
I go, we can just file an extension.
yeah. And now they're like going, no, guys, that was sort of a one-time thing. We really do want you guys to issue
Yeah.
and be done with this
But
before
under
December.
circumstances when the extension
Yeah.
requested, I assume you say that's because we didn't get this thing we needed till December 1st from the federal government, blah, blah, blah.
Exactly, and so you do have to put a reasoning in there, and they'll let you know whether you're approved or denied. So,
Yeah.
I mean, the state's been really well. I mean, they worked with us, and even GFOA's worked with us on extension requests. So.
Great.
Very important process we go through, but it's amazing though, statewide, not all cities, get them done.
Do they get penalized if they don't?
I don't know what the penalty is, but I mean, I'm aware of some cities that are, for a variety of reasons, they didn't get them done. So they had a turnover of council and staff, and they realized, hey, we don't have,
A lot of the same issues boil up, regardless of size. It's just, whether you're trying to work through, $1 million or $100 million, normally that $100 million, you have a bigger staff to help you work through it. So it's really the smaller, it gets almost more complicated in some respects just because you have one person trying to do a lot more. And to your question, the state does have some hammers in their back pocket. They have not chosen to use them. There's also, the state could pretty much contract an auditor, get into a situation where, because in theory, somebody could request the state to audit. The state auditors are busy auditing the state. So I don't know what or how that would work through, but I could see that happening because there are a number of those, especially smaller cities out there.
And this was earlier in the 2000s, probably 2007 or 8, when I was working out in the auditing world. There were some clients that we took on that they were 3 or 4 years behind on their audit, or hadn't had their budget in for 3 or 4 years, and the state was threatening to shut them down. If they didn't,
Shut a city down.
Close the entity, or it might have been like a fire district. Just close the entity. You can't operate, and they give you deadlines of when you have to get everything in. So.
Probably the most concrete is for school districts.
Yeah.
ODE we just aren't going to send you your check.
Yep.
Yeah,
Yeah.
State school funding.
Yep.
Yep.
So that's the problem.
For school
For
districts.
school districts.
For a
But
city, not really.
they-
I mean, you have your debt covenants that you probably have to have your audit done by.
March 31st,
Yeah,
yes.
March 31st for your debt covenants, but.
And if you have a federal audit, that's due to the federal government on March 31st. You have some deadlines if you meet certain qualifications, but really the school districts is where they can really hammer
Yeah,
folks on.
exactly. They can hit you with the money.
Yep.
And a significant amount of it for.
Yeah.
Yeah.
Awesome.
Thank you.
Thank you.
You're welcome to stay the rest of the meeting, or I'm sure
It'll be riveting.
Katie will let you slip out.
I'll take my leave. Thank you. I'll learn all about it soon enough.
We'll see you soon.
Yeah.
Thank you so much.
Have a good night, Dan. Thank you.
Good night.
So the next thing I wanted to do is just to review and update the financial policies. And this was noted, you know, the financial policies are part of the budget committee, and they might make a recommendation to city council. The public works director pointed out, because he had a question on the capital improvement plan, and I had missed something in the appendix of the budget document where it says the capital improvement plan, the city manager or designee will prepare a 5-year capital improvement plan annually and submit it to the city council for approval. We're on a biennial budget, and you know, it gets a little tricky with local budget law. Yeah, you might be able to switch out some projects, but switching out dollar amounts, it gets a little tricky because when you have those capital project funds, like for example, the general construction fund, under budget law, they say, well, you should know what you're spending on these capital projects either the next year or the next 2 years. So it's not, it gets a little trickier to add a lot more dollars, but you can always switch out projects. But we just request that, you know, we move this to a biannual plan that we bring in front of city council. And this is a, you know, if everyone agrees, this is something, a resolution I bring in front of city council just to kind of update the financial policies of the city.
Works for me.
Okay.
Makes sense, actually, is what I should say.
Who would bring that?
Myself. Yep. You know, we did update, I think it was maybe about 3-4 years ago, where we had that little verbiage about the 20 or the 15% to fund balance, but we strive for 20. We updated it to say 20% because that's what this committee expects. So.
Hey, David, how much does our audit cost us to do each year, about, roughly?
Between the city and the URA, you're looking probably about $90,000.
I was not even close.
No, you won't.
That is, I'm not even gonna say.
I think it was 35.
I'm not even gonna say.
No, but one thing, just as you know, one thing if there's anybody listening at home and to this committee, you know, we're starting to review a lot of our contracts. It's been a while. We've been with TKW, just for being good stewards of the public's money, we are going out for RFP on our auditing services.
Well, we did that like 5 years ago, I think.
It's been a while. So yeah, we just want to make sure we're getting the best pricing, see what else is out there. Not saying we're going to switch, not saying we're not going to switch, but
Diligence.
yeah, we're doing our due diligence. So, and we're doing that a lot. We're reviewing our contracts, seeing is there any other entity we can piggyback on. There might be some co-ops or something that we can work with another city. Maybe we can get a better price and a better discount. So that's something I know the city manager has kind of been pushing down on us. So we're starting that process. So.
Thank you for that work.
There is a lack of
Yes.
audit firms.
Yes.
Government work out there.
Yeah, there's very few.
Yeah, and there's some from when I was in the field.
I don't know the reason why.
It's all the new the new GASB standards that keep coming down. They're getting so complicated. Some people are just leaving. I mean, to be honest.
I don't blame them.
I mean, there's other work. I mean, like,
Yeah.
choices.
I
It's
love
hard
auditing.
work.
Maybe I should
Yeah, I know.
join auditing.
Maybe you should. I'm not gonna.
Yeah. Government, though.
Yeah.
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 That's where the
All right, so financial update. One thing I want to let this committee know, even though we're on a biennial budget, right now we're beginning our projection process. We're taking a look at all of our revenue buckets, our expenditure buckets. We're projecting where we think we're going to end the year, because now that we're on a biennial budget, this will allow us, if we see any revenue buckets that may be falling short or expenditures that are higher, we actually have to get that authority from City Council. It will allow us time to make any correction we need to do for the second year of the biennium. So we are going through our projections. I'll have that for the next budget committee meeting, which will be the beginning of June. And by then, if there was a major correction that needed to happen, I'm sure the city manager would have already had those discussions with City Council with his regular meetings. In the general fund, I'd want to say everything is looking really good. There are a couple buckets that we're looking at, and it really deals with private development. We've noticed private development is down. Craig and I have been kind of focusing on a little bit of those buckets through this projection process. Once we know where we might end the year, there might be some corrections that might need to be made. But one kudos for Jared. He is actually the building manager. Yeah, private development's down, but he's balancing his budget. His expenditures are down too. His revenues were X, expenditures were Y, and he was in the positive by like $24,000. So he's really monitoring that because he knows private development's down, which is what we expect of our managers, directors, or supervisors to do. So really in the general fund, we talked about this last meeting. Property taxes are coming right online. We actually come in a little bit better growth than what we projected by, but not much. You're talking about 0.1%. Fines and forfeitures is a little bucket that I'm watching. That's my responsibility. Yeah, we are at 40% collection. I'd like to see us more at 50% collection, so that's one revenue bucket. We did have some work sessions. There are some additional cameras, mobile cameras that we're going to be putting up in a few spots in the city, which I would expect this to be corrected, but it's really the charges for services is the bucket we're watching. Franchise fees, you might say, well, why is that at 30-some%? That's just due to the timing. You might have PGE and Northwest Natural Gas. They send us their fees once a year. And those are coming in usually February, March-ish. I've noticed some of them are a little bit later than what they have been. Salaries are a lot higher. We're still below the 50% threshold, but the reason why it's coming a little bit higher is I had to budget these departments a lot more tighter than I would like to have had, just with some of the difficulties we had. I usually like to give these directors, supervisors, managers some flexibility, just in case a new employee comes on. Okay, they might cost a little bit more. Maybe they're married and have a family. Their insurance is a little bit more, but I had to really budget this stuff a little tighter. So that's why you see it at almost near 48%. Public Art Fund, this is just money from all of our transient lodging tax revenue. And there's been no project identified, so there's been no expenditure. All this money is sitting in contingency. So if, I think it's the Public Arts Commission, if they were to identify a project to bring in front of City Council, we'd be able to have access to that money for any kind of project that might be identified during this biennium. But again, this is just all transient lodging tax revenue and the interest we're earning off that money that's sitting in the LGIP account right now, which we're earning a little bit over 4% still. Rates have come down a little bit, but now, of course, with everything going on globally in Iran and oil, and they're starting to tick back up a little bit more. But when we get to Sherwood broadband, you know, it does affect the debt you go out on. You pay a little higher rate on that.
Can I ask you a quick question?
Yeah.
Sorry, I meant on the general fund.
Oh.
How, for the beginning fund balance, maybe you'll get to that later on, how was that compared to the audit's actuals?
It was down just a little bit. This is going to be the first year where I'm actually going to have to, I would say our projections came in, I don't want to say worse than what we thought. Our expenditures were more than what we thought. So I'm going to have to do a little bit of adjustment. I think it was about $200,000. It might get corrected in the second year of the biennium, so I'm kind of watching that closely. Nothing that's too concerning right now, but this is kind of the first year we're used to all this rollover.
Yeah.
But with us having to tighten down on certain projects we're working on, you know, things are a lot tighter than what they have been. But that's something we're monitoring, and something that when we correct, it's not as if we are going to get that money out of contingency, because if I were to get that out of contingency, then that affects the forecast. That's
Exactly.
something we're expected to find. And there's been positions we've talked about, strategies. You know, you delay hiring by a little bit, by a few months, 2 to 3 months, and so we're making those dollars up. So
Okay, thanks.
nothing that's too concerning, but it's something I'm watching, because I expect it to be corrected the second biennium.
Yeah.
Their second year of the biennium. Economic Development Promotion Fund, again, this is money that gets transferred from our transient lodging tax. In terms of salaries and wages, that's where our economic development manager, half his time is spent out of this fund. Any, for example, like conferences he might go to, business development. He does travel. He's, you know, trying to bring businesses into this community. And he's also working with, I think it was the Old Town Strategic Plan. You know, he's been working on that, you know, about things that we can do to Old Town down here. So there's various things that the economic development manager is involved in. But again, the funding is all transient lodging tax dollars that come into this. That's what that transfer in is for.
You remember the percentage of the TLT that goes to public art versus economic development?
I think it's, so you have, there's that 70-30 rule. So you have 30% that goes to the general fund, and then you have the 70%, you have, I think it's 33.33 of that 70% goes to public art, and then the difference goes to economic development and promotion.
Yep.
But I know I have to read, I think, I know down at the state, they just passed a bill. I don't know what's been signed into law. They're increasing the state transient lodging tax rate being charged to help with wildlife, endangered.
Oh,
Yeah.
Yeah.
But, yeah, wolves or something. I haven't read that. All wildlife. Okay.
And to go in and help mitigate when we have a forest fire, it is actually very good, because we haven't had that kind of build-up revenue.
Yeah.
And now they've figured out this would be the way to do it.
And I believe they are, I haven't read, I thought they're changing that percentage breakout too, from 70-30 to 50-50, I think it is.
There's definitely been some conversations. I hadn't heard the final.
Nothing's passed, okay.
Yeah.
Yeah, it's something we're watching, and I know we're gonna have a work session coming up soon. I think it might be May or June on transient lodging tax, so I'm sure the economic development manager is gonna fill city council in on that. But there are a few bills down at the state level where they're talking about.
I think you're
Yeah.
thinking two different things.
No, transient lodging.
Yes, but two different things about the state transit lodging tax. The transit lodging tax that we get as a city, right now, currently, we have to use 70% on tourism things and 30% to the general fund. They're topping out, changing that.
Potentially changing that, yep.
But the wildlife thing is a good thing.
That they have, I did see the Senate approved it down there, or it's so, yep. So that will get signed into law. which next we're at the transient lodging tax. And this is all timing too. When you look at the revenue when it comes in the door, you know, I want to say this is all December 31st. First 6 months out of the year, we do have payments that come into January. We really don't worry too much about timing until that June 30th, when our end of our fiscal year, where you have to really watch. Money comes in July, was it earned in June? So we have to, it depends what period. So there is still money that would increase this, that's still coming in. And you got to remember last year, you see that $97,000. There was a lawsuit because that hotel was not sending in their transient lodging tax payments. And so the county who we use as our collection, they collect the money and they send it on to us. They went after the hotel and they collected the money this is money we should have received the prior year as well. So that's why you see such a large collection in the prior fiscal year. I think it was like 40-some thousand additional dollars we received in November of 2024. And again, you see the money being transferred out. That gets transferred out to all the various buckets that we spoke about, the 70-30. All right, the grant fund, this is for our Community Enhancement Grant Program. And you can see this year we've collected $0 at December 31st. I did hear from Metro just a couple weeks ago. They're sending our first and second quarter payment, but we didn't get those till the end of February. You can see last year we had already received the first quarter payment, but they held on to those a little bit longer. There will be a new IGA coming to City Council at some point. We haven't seen that from Metro yet because the old IGA has expired.
What's an IGA?
Intergovernmental agreement. Sorry.
It's
yeah.
not the grocery store.
And the materials and services, that just represents the grants that were awarded, the almost $90,000 that the committee awarded last June. And this year, for the second year of the biennium, that committee meeting is set for either the first or second meeting in May, where we're going to discuss all the grant applications.
Grant applications are due by April 15th if anybody has any nonprofits.
I thought it was already,
No, April 15th.
Yeah.
I saw that you're assigned to it. You're gonna be the liaison?
No, all of council is the committee. Yeah,
Yeah.
yeah.
Oh, you might be the block grant or the.
Oh, I'm the liaison to the county community development block grant. But as far as our CEP grants, which are the city ones, yeah.
Yeah. So that will be occurring in May. And, you know, last year we did have, I think, about 350,000 requests, but we only could give out $90,000, you know, because we get a limited amount of money, about $100,000 each year.
Well, I mean, you got baseball. I mean, you get the youth organizations, the arts organizations, the city sometimes puts in applications. Yeah.
And it will fluctuate. I remember one year we had to go out for a second round of applications because the first round we received 2.
Yeah.
And so we went out again and we awarded some more grants, but it kind of fluctuates year to year. Community Investment Fund, this is where all those unrestricted, you know, how we used the ARPA dollars years ago and unrestricted dollars we put in here. This fund has helped out various other funds, whether it's the sewer fund, because, you know, luckily we received a nice sizable chunk of money from the state here soon for the Brookman project. But they've given $600,000 to the sewer fund, which is the sewer fund is paying back over 10 years because it's a capital improvement that they're working on, fixing a pipeline, and also have loaned money to broadband. So it has been a nice pot of money there as we need to, because you can do all these interfund loans because we're allowed that mechanism, but the money's being paid back. So it's nice to have that little bit of nest egg, or I don't want to say savings because, you know, it is being utilized to really kind of improve and invest in the community. So street operations, you know, nothing's jumping out to me. You might see there's certain projects, or you might see expenditures are up at 50%. That's just because I know you've heard me in the past, well, we haven't done that transfer yet, or we haven't moved that money. You can see I told you we'd work on that, make sure it's done before the next budget committee meeting. So you can see we transferred that full $750,000 already. That goes to the street capital fund. We just set aside some money for the street, for future street projects that we have. And the street capital fund is doing really well, has a nice sizable amount of money for all the various projects that we have coming up in the capital improvement plan. And I just spoke about the street capital fund. No concerns, everything is pretty much right online with, and really when it comes to revenue, it's just a matter of timing. Like you could see the infrastructure development, that's really, it just depends on the various projects that are going on, the transfers in, when that occurs. And then folks get charged out to various funds. So if there's no street projects being worked on, there's no payroll expenses being charged there. So it really fluctuates and depends on the capital improvement plan.
We're fortunate for being one of the densest towns in Oregon.
Yeah.
Dense in a good way.
We have
I was just about to say
less
that.
lane miles per citizen, which helps, and we're very diligent about doing the proper routine for.
It's kind of nice not driving through potholes in the city.
You know when you leave Sherwood.
Yep. And my wheels realize that too when I run over a few of those. General construction fund. This usually, what's involved here is a lot of, whether it's Cedar Creek Trail, this is where expenditures have been charged in the past. We're also looking at there's a empty lot over here by the Art Center. We budget $100,000 here to look at design, look at something that potentially could go into that gravel parking lot. That's being paid out of this fund. This is where eventually the money charges for services right there. That is the money that's being, you can see there's, $36,000 being collected. That is the money that we have normally would have been recorded in the general fund, but it should be recorded in here, and that's all going for the turf replacement. That money's been building, so when we have to replace that turf, we already have that money set aside, so it's not like we have to come up with those, $600,000, $700,000, $800,000, because it will depend on the cost. So this is where that turf replacement will be paid out of.
Smart plan.
And I can take credit for that. That was set up by the former finance director, so that was very smart. Yep. Again, our water fund, this is a very healthy fund, whether it's water operations, water capital for the city, very healthy fund. You can see here I have moved between the two. There's a little bit of difference. It just depends if there's a little bit more money collected, and this is charges for services. There's multiple buckets of money that come into the water or water capital fund, but I did make sure 50-50 was split up in terms of water rates, because we have been setting aside 50% of the utility fees that we receive from our water in the water capital and the water operations, because the water operations, that balance was starting to get too large, and so I moved a lot of money over to the capital. But the next biennium, it won't be any more a 50-50 split. It'll probably be more like a 70-30 split.
And just to clarify, when you say the balance was getting too large, for the citizens listening, we're not over collecting money.
No.
We have projects that eventually will need.
No, exactly. It's just a matter of, there's certain accounting rules we have to follow where you can't, you might have a big, for example, when we had that expansion project down in Wilsonville, that was a $10-11 million project, and we have another large expansion project set to go somewhere in the early 2030s. I want to say it's about 32 or 33. So now we're having to build up those funds to be able to pay for that expansion. Right. So it's not really, we're not overcharging.
Yeah.
We do have an ordinance here. We are limited to only a 2% increase, even though, our costs might be going up 5, 6, 7%. We only can increase that 2% by 2%. So yeah, we're not overcharging. So I just want to be clear there. In terms of the water capital, they just have not started any projects yet. So that's why you see capital outlay. They have a $1.3 million budgeted, but there's hardly been any salaries or wages charged there because all the public works folks have been working in different funds, working on different projects. That's why you see a 0.48. Yeah, spring, summer, yeah, kind of depended on. Yeah, that's true. But this is only through the end of June, or the end of December, so it's only for the first 6 months, so. Sanitary, this is one fund, we all know, we've identified, this is a fund that's, been struggling, doesn't have a lot in reserves, whether it's operations, capital. We don't have a lot in the reserves there, but fortunately, the city was able to, I believe it's $3.2 million in state funding for the Brookman project, which is great. I think that's going to be sold with the lottery bonds sometime in the spring, I believe. The state's going to do that. So that was a blessing to receive that, because that was something that we're going to have to figure out how to pay for. But by doing what we did, it allowed those homeowners, I believe, not to see such a large, have to make such a large payment for their SDCs. So,
Yeah,
the city was really good working with Clean Water Services and figuring out a way to make it cheaper on those homeowners that were going to see a large financial strain.
So this budget is the one that we pay to Clean Water Services, or we?
Well, no, yeah, we collect a portion of money for Clean Water Services, but that doesn't. It doesn't affect our revenue, doesn't affect our expenditures. It's just a pass-through. We just collect the money, putting it in a liability account, and just paying it out of cash. So.
And do they pay us anything back? The privilege of doing business.
No. Already talked about the sanitary capital fund a little bit. That there's not a lot of projects that are identified. Only 292,000 this first year, but next year we do have $1.9 million that we owe Clean Water Services. That's for a portion of the Brookman Sanitary Project. That was something that was set up through an IGA, or an intergovernmental agreement. And so you'll see a lot larger expenditure next fiscal year in this bucket.
And has that number been audited by an outside auditing firm?
The
Have Clean Water Services been re-audited since they had their problems?
They're audited annually.
Yeah, every
And yet they got away with various things, even though they were auditing. So that's why I'm asking.
the one thing I think that there is a little bit of a misconception of what an auditor does and what they look at. When we talked about $90,000, they're auditing a point in time, and they're auditing transactions throughout the year. They can't look at every transaction. If they looked at every transaction, you'd be paying a significant amount of money for your audit. They have what they call materiality thresholds, or some thresholds they might say for capital projects. If you're a larger entity, it might be every invoice over $100,000 we're gonna look at just to verify. For us, it might be everything over $10,000 because we're a smaller city. So when you start getting into smaller dollar amounts, they still do spot check. I guarantee you they look at any kind of procurement card transaction that I might make or anything like that. But it might just been a small dollar amount, or might have been, there's so many transactions, they just don't look at them all. I mean, I can't explain the procedures there, but I can tell you when I worked in the auditing world, yeah, you can't look at every transaction. You try to do your best. You come across fraud, or you come across anything questionable, you alert management, you alert whether it's the commissioners or city council or the board. So, but they are required under state law. Every municipality, a school district, they're required to have an annual audit and file it with the state of Oregon. So.
Do they normally send us a copy of their audit?
No, the thing is, you can go onto the state audit division website, and you can look up any municipality's audit for the last, I want to say 10, 15 years, for quite some time. So, yeah. We don't require it, but, so. And we don't really have any authority over what they do over there. So.
I was gonna say, I don't know why we would get a copy of their audit,
Yeah.
if it's
I
not
have a
there.
copy of the audit. Yeah.
Well, you're, as a citizen, you can go get their audit, yeah.
Okay, so stormwater operations, everything's still, we're at 50% revenue collected. Expenditures are down. Really, again, just depends on what projects, but you can see the expenditures are pretty comparable to prior fiscal year. Stormwater capital, everything is looking good in this fund. There's nothing that's standing out to us. Really, it's the general fund bucket of monies that we're really focusing on. And Sherwood Broadband, I'm happy and pleased to report next week we will be signing that $15.5 million loan, so this project can get completed in the next, I think, 3 to 4 years is the timeline. But yeah, we'll be signing that next Thursday. So those proceeds will come in, so Brad and them can continue to do the great work they're doing.
Do we have, figures on, the rent they pay to the property they are doing business out of now?
We own that property.
The road course.
Yeah.
Yeah, we own that. How did we own it?
We bought it.
Have we always owned it?
We've owned it since 2021.
Years ago?
I used to walk over and
Yeah.
see horses there. And
Yeah.
Yeah, 2021 it was for sale.
how,
We
so
purchased it.
the city bought it.
The city bought it potentially for parkland down the road.
Yeah.
Just thought it was a good piece of property to have.
Yeah.
Yeah, and we rented it,
Tenant in there for a while.
and we rented it out to a
The
Contract.
county, yeah.
several years while they're doing
Yeah.
the roads.
Yep.
Project.
Yeah.
Made revenue.
So do we rent it to Sherwood Broadband and then they pay us back, pay the city back?
There's been no formal rental agreement. It's something that let's just say I am going to be looking at the whole fund structure here at the city for the next biennium. So a lot of options, a lot of things we've talked about behind the scenes. And then there's always an option. We were getting to a point when this tenant was moving out, we were renting trailers at Public Works for the broadband because, you know, that's all of a sudden a program that's expanded and we were running out of space. And so we thought the Red House would be a great idea for them to be able to work over there and park vehicles over there just because, yeah, they had no space over Public Works. And thus the reason why we need part of the URA is a new Public Works building because just Public Works themselves, they're outgrowing the building that they're currently at, so.
Okay, I just wondered how much. I
Yeah.
see them every time we go to Admiral's.
Yeah. But no, I mean, everything I've heard and everything I've seen, you know, broadband's doing great. You know, yeah. So, look forward to it being completed. Updated 5-year forecast. Last committee meeting, we dropped below the 20%.
Yay.
Now we're back up above the 21%. We're back up over the 20%. The reason for that is we finally received the information from WCCLS on the amount of money additional money we're gonna receive in years 2, 3, 4, and 5 of this forecast. Now, I'm glad to see we're above 20%, but like I said, you know, there's some revenue buckets that we're monitoring in the general fund that I can't. Yep, I can't say that won't drop us potentially below the 20% again, but this is all stuff that we're tasked with as directors and as city managers, assistant city managers. We got to make sure we maintain that 20%. So that's on us to figure out. But I don't want to get too excited about this because, yeah, it might look like everything is fixed. Yeah, currently right now, but like I said, there's a couple revenue buckets. I'm really watching that general fund, and you know, we had to lay folks off, so there's a lot of departments that really don't have what they need. But we know we have a financial goal, and so we work hard to meet that. So.
I was going to mention when you were going through the general fund, the fines and forfeitures and the new mobile speed things, that will be an uptick in our tickets, which will probably mean an expense on the side of staffing.
Yeah, exactly, and that's something that when we're looking at these mobile cameras, you can't just look at potentially the revenue that could be generated, because, you know, my court staff, we lost about 37.5% of our staff. So if we were to see a large uptick, well, I might have to hire 1 point FTE back. So, you know.
Which would pay for itself.
Which would pay for itself.
Would need to pay for itself, yeah.
It would, you know, there are some roads here, like Thomas, you were saying Sunset, you know, that there's folks that speed through there, and whether it's Oregon Street too. So I think these cameras could be useful just to
get people to
as the mayor would say, behavior changes.
Yes, that's the
And
goal.
some roads need some behavior changes.
I mean, we talk about it as a revenue, but I'd rather not have the revenue and have people going through our school zones at the proper speed limits, but.
Exactly. When someone would see, oh, you've collected 1.5 million in traffic fines, well, it might cost 1.3 million to just to run the program with the folks over at the PD, my court staff, my time that's involved, so it's not a money generator. So there's quite a bit of expense that goes with that, so. And a little bit on the project update. These are kind of some of the projects. Arrow Street construction, Glen Eagle Drive. These are just some things. I know, Thomas, you were asking about the crosswalk. They're about 50 or 63% completed. They had run into some issues with the ground out there, which kind of delayed the project. A lot of these projects are either in the works or just getting started. Some projects I didn't include on here where we might only paid a few $1,000s and it would have been less than 1% complete because I'm just looking at, okay, what has had some substantial completion?
Is this as of December 31st or is this more current?
December 31st.
So this is, okay.
Yeah. So, with that, any questions? You can adjourn this meeting, then we have to go to the URA meeting.
All right, the Budget Committee meeting is now adjourned.
Okay, let me just mark down the time real quick.
Isn't that beautiful?
Yeah, 7:19, yeah. Okay, let me get the URA up here.
Taylor must have gone to enjoy the rest of his birthday.
Good for him.
Can't blame him.
Just quiet.
Okay,
You ready?
yeah.
All right. I will now call to order the City of Sherwood Urban Renewal Agency Budget Committee meeting for March 5th, 2026. David, will you please conduct the roll call?
Chair Strode,
Here?
Matt Kaufman is absent, Brian Fairbanks is absent, Aaron Wiebe? Here. Lana Painter,
Here.
Thomas Sherwood? Here. Nancy Taylor? Here. Mr. Rosner is absent, Kim Young?
Here.
Renee Browse is absent, Taylor Giles, he's no longer online.
No, he's on there.
Oh, is he on there?
He's on there.
Okay.
No, he's not.
No.
Are you sure?
Taylor, are you there?
No, it's just Sherwood budget.
Okay.
There's no person on there.
Keith Mays?
Yeah.
Doug Scott is absent, and Dan Stankey is absent.
Giles is terrific.
Correct.
Yeah.
He's
Happy
saying
birthday,
he's
Taylor.
He just checked in and said, yep, I was there.
Well, but we also have.
All right, next item is approving Budget Committee minutes. Can I get a motion to approve the URA Budget Committee meeting minutes for December 4th, 2025 meeting?
Moved. Second.
All in favor?
Aye.
All opposed? All right, motion passes. Tonight's meeting will be a working session only, so there will be no general public comment at this meeting. I will now turn this over to Assistant City Manager Kristen Switzer.
Welcome, still.
And I might need to take a second because all of a sudden this thing is frozen up. I have no way to move this.
Turn to our.
We have paper.
Yeah, we got our
Yeah.
handouts.
Turn to our handout.
Yeah, look at us.
Old school.
Yeah.
Yeah, it's just frozen. I'll just do it. Yeah. Okay.
We'll freestyle it.
No, 1,000 pages.
Yeah.
Right by line.
If you can recall from the last Budget Committee meeting, this URA is doing exceptional. Prior fiscal year, our assessed value growth was a little over 50%. This current fiscal year, we're about 44%. You can see in terms of property taxes, we have already collected 112% of what we thought. It's really still hard for me to ever want to budget a 40 or 50% growth, so I still am a little conservative.
We do great every year so far.
But I can't complain when we bring in more money, so that allows us to, with a supplemental budget, recognize additional revenue that then we can transfer over to the capital, URA Capital Project Fund, just to either continue on current projects we're working on or start to look at future projects there. We did take on a little bit additional debt here. This is in regards to Ice Age Drive. We did 2 loans, one through the Oregon Transportation Infrastructure Bank, and then also through Business Oregon. You know, I don't know if I should say this publicly, but they've only so far, even though that project is about 50-60% done, they've only billed us $173,000, and it's not anything that I am.
Not in a rush.
Not in a rush, because then they draw down on the loan, and then we pay interest on that loan. So it's nothing that I've,
It'll come in time.
it'll come in
Yeah.
time.
Yeah.
The only time I get concerned is at the end of the fiscal year at 6:30 when I need to know how much they worked on,
Yes.
so I can recognize that. But, for now, they can take their time on billing us.
And how is that?
What was that?
Is that project back here?
Which project?
Is I stage?
Oh, it's in the,
Yes.
Project updates page.
Yep. But we'll go through the capital fund real quick. And currently, the project's being worked out of the URI capital fund is, the bridge was finishing up in the fall. There's still a little bit more work when we get to the project side, because there was a billing for October, November, and December that we paid out in January, so it wasn't reflected, even though you might say, hey, the bridge is done or substantially complete. Why are we only at 94, 95%? Well, there's still retainage that we need to pay out eventually when we sign off from the contractor. So there's still a little bit of things, but it's more like kind of just the finishing touches on the bridge. But for the most part, that bridge is complete. We're also working on Ice Age Drive and Sherwood Broadband, because there's some of that backbone being put in that's within the URA. So those are the kind of the main projects that this URA is focusing on this biennium. And if you go to the project update, we've already talked about the pedestrian bridge. Really, the final bill did come in. We paid that out in January besides retainage. I know there's a little bit of things they're working on, kind of punch list items. Ice Age Drive, like I said, even though it's only showing up at 28.5% complete, we know it's much farther along, but this is just what we paid out of our pocket to date on it. So like I said, I'm not clamoring to contact ODOT or anything to have them catch up their billings.
Maybe that's why they're not enough money. They're not billing their clients.
And then currently the tannery site cleanup, I think that's still kind of in the, I want to say the design phase. And they're working with the consultants out there to get that property cleaned up. That will be the future site of the new public works building.
That's the goal.
Nope.
I'm just curious, how many miles long is the Ice Age Drive?
1 mile? I think it's a one.
Yeah.
It's not very long.
Unless you're running it.
30
then it
meters.
feels like it's a lot longer.
It's always shocking how many millions it costs for like 1 mile of a road, you know?
Part of it is because it's basically you're putting a road, through rock. It's just rock.
Yeah.
So everything, all the underground utilities is expensive.
Is part of the little property we had to buy, is that part of that expense as well?
Yeah.
Yeah, so we had to buy a little piece of property, which we'll end up selling at the end.
Yeah.
There's
Okay.
gonna be some return to lower expenses. Two properties.
Yeah, and
Two
like the road
properties.
didn't even exist here, right? This was like a whole creation.
Mhm.
Yeah, okay.
Yeah, if you were to go up Oregon Street, right past the big Schnitzer buildings there, the Schnitzer properties, you will see the little indent of the road being built back there. It's kind of right as you crest Oregon Street, going out towards 12th and Sherwood Road.
Got it.
You'll see the little road being built there.
There's a lot of transportation SDCs that developers would pay.
Yeah.
to develop the road fund.
Yeah, yeah.
And you won't be able to get out of
Yep.
Sherwood if you go that direction.
It's
good.
It's gonna move better.
And I know the ODOT is featuring this project in one of their quarterly magazines. I remember them contacting Eric, just, for stuff that they fund, they like to show, the projects. So it'll be interesting, because I think the police were going to fly a drone so we could kind of actually see what the road looks like, how it's being kind of designed and built.
Straightest road?
There's a lot of rock and
Could be fun.
Navigating around the requirements of.
There's a lot of rock. If you think about the quarry there's a lot of rock. I lived over there.
So it's 30 miles this way.
Yeah.
1 mile.
Yeah, that's true.
Big power
As the
lines,
crow
you
flies.
have to navigate underneath these power lines in a certain way with all the power support structures and other crud in the way. But it's not intended to be a highway between the two roads.
Well, yeah, I bet it's going to open up those landlocked lots back there, which will be good.
What worries me is the tannery site cleanup,
Why?
because I wish it was just done. It feels like a headache.
I feel that way on all of
Nothing
this.
but a headache.
Yeah, but that's part of
I know.
what,
Part
you
of
know,
good citizenry.
yes.
Absolutely.
Cleanliness. But it's gonna mean trucks and trucks taking things out, and trucks bringing in clean fill, and it's just gonna mean for a period of time,
But afterwards.
Free
we'll
fill.
all
Yeah.
feel
A lot less than you think.
I'll be dead, but.
Put a sign up.
No.
No, I
No.
don't think you will.
And it'll be a lot less in and out than you think.
We actually have to,
compared
the
some other stuff.
cleanup, there's a time frame on the
I
EPA
think it's
grant.
2027 or
Yeah.
28, somewhere in there.
Yeah.
It needs to be cleaned up,
It's
yeah.
not far off.
Yeah, we have a timeline on that grant.
So Nancy, I think you'll still be here.
It's in the,
Oh.
it's in the progress.
Well, I think what Craig talked about before was, I think they were going to initially transfer it somewhere in Oregon, now they gotta transfer it somewhere up in
No,
Washington,
it was,
or
yeah.
something that, yeah,
The-
where this certain land, or Hillsborough wouldn't take it anymore, so now
right,
we have
so
to
now we have to truck it much
truck it to
farther.
a certain location.
By the time these dates come around, we might have to shoot it into space.
Nah, we finish our projects on time and on budget. We're good. Don't stress.
Worst case is it goes to
It's okay. Don't stress about it.
pass it down.
Have you
Arlington.
seen?
Arlington.
I have a
Yes,
picture
Arlington is
out there
where-
where there's like a bank and you just see the hides all stacked up on each other.
Oh, wow, I've never been out there.
Could you just put it under all
I'll
the
show you a
buildings?
picture. It's
Yeah,
very
that'd be
interesting.
interesting.
Still,
Yeah.
Yeah.
not killing anybody where it's at.
I remember sitting in on these meetings and we had a packet, and it's,
Oh, I don't know. I was out there and took the pictures.
you know,
so.
and what Ken's talking about, just layers of
Wow.
knocked over pallets.
That's what they were in, we'll create a cell of bad soil, whatever, it'll always be there.
Yep.
Anyway,
I think that's it.
That's
If
it?
you wanna
All
formally
right.
adjourn it.
Well, the meeting